Gold and silver, they are money. And this is about money. This is not about, it's not about use. It's not about production. It's not about consumption. When this goes down, it is a credit event. It's the end of an empire. The United States is so indebted that they can never pay back what they owe in current dollars. And the dollar is going to crack, credit is going to crack, and when credit cracks, the real economy stops because everything runs on credit. Well, you just got to compare it to the dot-com bubble of 2000. The valuations on these AI stocks are ridiculous. And what they've forgotten is that there's not enough electricity produced to do all these wonderful things. And actually the biggest commodity to be used for AI is going to be silver. And silver's already in a deficit situation.
And if we do look at these valuations, Bill, so there's two camps really. So one camp believes that, well, there's more, but there's two main ones. One camp believes that we're going to have this big crash and that's going to normalize the valuations in a rapid way. But on the other side, could the US stock market do what Venezuela did, what Argentina did, with continued money printing, just keep going up in measured in fiat dollar?
Yes, absolutely it can. But there will be a big pullback first. I mean, if you look at every hyperinflation throughout history, there was always a crash, always a big panic. And then all of a sudden stocks stop dropping and they start going up like a rocket ship, but only half as fast as the currency loses value. And that's based on their local currency. I mean, you could look at, I think it was 2 years ago, the Zimbabwe stock market was the best one in the entire world in Zimbabwe currency, but not in dollars or not in gold. Gold is the measuring stick.
And if we could talk a little bit more about the US dollar and how you believe it could perform for the next years and for the next decade.
Well, you said and for the next decade, that's assuming that the dollar is going to be in its same form a decade from now, and I assume it will not. There's two ways that the dollar is measured. One way that mainstream media measures it through the USDX index, and that's versus other foreign fiat currencies. That's meaningless. Whether the dollar is stronger or weaker versus the yen, the euro, the pound, that doesn't matter. The true valuation, as I just mentioned in the last question, the true valuation is against gold. And the dollar in the last year has lost 35-40% of its value versus the dollar in the last 12 months. Gold does not go up. Gold does nothing. Gold is the measuring stick. What does move is the dollar. The value of the dollar has dropped, and thus it takes more dollars to buy the same 1 ounce of gold.
And with that being said, Bill, is it still important to have certain liquidity, certain amount of cash on the sidelines if we do get this crash in the stock market, which should inevitably put gold, silver, and miners under pressure as well?
Yeah, well, it's important right now to have some cash because you've got to pay your bills. You got to pay your monthly bills. But after this thing goes down, this is going to be a nuclear event. And if you've not read about the Great Taking, I would spend the hour to either read or watch a 1 hour interview on the Great Taking. When this goes down, banks, brokers, insurance companies, they're going to fail. And when they do, they're going to take your capital to fix their problem. So you're going to lose your money. After the crash occurs, what's the point of having dollars? I mean, yes, you should have some paper dollars, and they'll probably work for 10 days, 2 weeks, maybe 3 weeks, until people decide, hey, I'm not giving you eggs or a chicken or a pig or whatever for dollars. I'll gladly do it for silver or gladly do it for a little small piece of gold, but I'm not going to do it for dollars. I'm not doing it for a piece of paper that has no backing.
And Bill, how would that new world look? Will there be a new currency, just very similar to dollar, but something different? Or will they have to back it up by something digital? Or will it be one of the maybe cryptocurrencies? How are you viewing the future from that perspective?
Yeah, they'll definitely try to bring out a central bank digital currency. There's no question about it. And the question is, what's it going to be backed by? Is it going to be backed by something real like gold or oil? Or is it going to be backed by the full faith and credit of a bankrupt / insolvent issuer? My opinion is they're going to try, the first time, they're going to try to bring out a new currency that has no backing whatsoever. So what's the difference between having dollars in your bank account unbacked versus CBDC in your bank account unbacked? And I'm going to tell you the only difference is with a CBDC, you're not looking at physical currency. So they can turn your account off anytime they want. If you and I are doing this interview and they don't like what we're saying, and I'm sure they don't, by the time this thing hits the web, your account and my account will be shut off. I mean, you could have $20 million in an account that you can't touch, that's gone. They've taken it. So yeah, central bank digital currency is definitely what they're gonna try to bring out. And you asked me what it's gonna look like, and I'll give you a 2-word answer: Mad Max. Society is gonna break down.
Right. And so do you think, well, I suppose you answered the question that the public will not really accept that sort of future. So how will this dynamics between what the government potentially wants and the public not accepting that, future and control?
Well, it's not just the public. What about our trading partners? What are we going to trade with? Are we going to try to trade with a central bank digital currency? I think trading partners, after the dollar itself collapses, what kind of confidence will other countries have doing business with the United States? Remember, we're a deficit nation. We don't ship out more than we ship in. We ship more in, and we got to pay for it with something. And the question is, will foreigners accept that form of payment? And I say, no, they won't. Not with the first round of central bank digital currency that will be unbacked.
The 2021 retail-driven silver squeeze faded below $30 under a wall of selling pressure. Large physical buyers simply didn't care. They were content with paper-backed ETFs, leaving the real metal untouched. That era has ended. The market floor today is defended not by internet traders, but by sovereign demand from the Middle East, Asia, and Eurasia. Central banks have become the ultimate dip buyers, anchoring prices whenever momentum stalls. Their motivation isn't to inflate the price. It's to secure scarce supply before future shortages tighten the market further. This quiet but relentless accumulation is creating a price floor silver has never possessed before.
The best way to protect yourself is to have in your own mind, nobody's going to come to save you. So you need to prepare yourself for a system down, maybe probably internet down, maybe probably communications down. I mean, I'm talking about living, like Davy Crockett 200 years ago. You need to prepare. I mean, obviously, the first thing you need to make sure you have is a clean source of water. You want to make sure you have some type of energy, something to create electricity for you, because what's to say that your local utility, when everything goes down, is still going to be generating electricity? You need to have a means of protecting your position. You definitely don't want to be in a city. You want to be rural. You want to be away from people, so there are less threats trying to come and get your food stocks, your position. Obviously, you want to stock up on food, and just get yourself right physically, mentally, spiritually, because what's coming is a battle. It's a war, and you're going to be on your own. You're going to dial 911. Nobody's going to pick it up. So do the best you can to prepare. And one way to do this, once you've got your preparations started and well underway, one way to test that is go home on a Friday night, turn your power off, turn on your alternate source of power and see if it works. try to cook over an open flame and find out that the pots and pans that you have, they're going to melt. So you need cast iron. You can go to my website, billholter.com. There is an icon up top of the page called Grizzly's Corner, and it is specifically related to preparations and survival. And there's some great articles on that. A fellow that used to go into central Idaho with a pack of mules for 6 months at a time. He's the one who wrote a good portion of the articles, and there's great links to products that he's used that he's happy with the quality. So, but it's a great resource, Grizzly's Corner.
Global conflict and competition are accelerating silver demand. Both the US and China have now placed silver on their critical minerals lists, acknowledging its essential role in defense tech, energy grids, and semiconductor supply chains. India has approved silver as an accepted loan collateral, expanding its financial utility. The IMF warns central bank gold reserves must be rebalanced for multipolar liquidity. Silver now fits that need. Supply, meanwhile, is tightening. The metal powers solar panels, AI data centers, and electric vehicles, while mining output stagnates. This is no longer a niche thesis. It's a race for physical metal, driven by the world's biggest economic rivals.
You kind of answered the question yourself by saying the sentiment in North America is weak, the sentiment in the rest of the world is very strong. And plain and simple, the reason the sentiment in the rest of the world is very strong is because the United States, back in October, I believe it was, of 2023, commandeered $300+ billion of Russian U.S. Treasury holdings. And the rest of the world looked at that and said, hey, if they can steal $300+ billion from Russia, they can stomp us out like a spider. So central banks, sovereign treasuries, they decided they don't want treasuries anymore because those can be taken away. Just like CBDC, they will be able to take that from your account. But if you have gold in hand, or if these sovereign central banks and sovereign treasuries, if they've taken capital and bought gold with it and they're storing the gold, they have the wealth. It can't be taken away from them. So plain and simple, the reason gold is where it is now is because the US dollar was weaponized, the SWIFT system was weaponized, and the US stole over $300 billion of US treasuries from Russia.
If we look at silver bill, is it the similar situation? Because of course in silver we also have that industrial demand. So how are you viewing silver overall, and which type of demand, the monetary and industrial, do you believe will play the bigger role in the future?
Silver will be gold on steroids in this move. Silver at 80, well, it's about 80 ounces now it takes to buy 1 ounce of gold. That's man's ratio. God's ratio, it comes out of the earth at 9.5 or 10 to 1. Which one's right, which one's wrong? Is God's ratio wrong? No, man's ratio is wrong. At 80 to 1, silver is grossly undervalued, and it should be 15 or 20 to 1, which says that silver should outperform gold 3 or 4 to 1 from this level. Now, silver is a completely different market than gold. Gold is basically money. Silver, yes, it's money, but there's industrial uses, technological uses, medicinal uses, even warfare. Every time we shoot a Tomahawk missile, there goes a monster box of Eagles. You're talking about 500 ounces, roughly, to build those things. To answer your question is, which is going to be the more powerful buy? At first, I will first off tell you, it does not matter, because we're already in a deficit of, 400 million, 500 million ounces per year. It doesn't matter, but where it will end up as a monetary decision. Yes, you're going to have industries fighting and scraping for whatever physical they can get. But when this goes down And when this breaks, I mean, silver's going to explode, gold will explode, and derivatives, the $2+ quadrillion derivative market, that will blow up, and that will bring in the great taking. That will take down the entire paper facade. But the final act, just understand that fear is a greater emotion than greed. Fear is the greatest emotion, and fear of losing everything is what's going to drive people into gold and silver.
In 2025, Dubai showcased a 1,971 kilogram silver bar, nearly 2 tons, capturing the market's imagination. The UAE is launching tokenized physical silver-backed financial instruments, including projects inspired by silver-backed technology. South Korea has resumed gold purchases and, for the first time in decades, added silver too. Russia and Turkey continue expanding physical acquisition strategies. These moves are symbolic and strategic. Governments are rediscovering what civilizations proved for 5,000 years. Silver isn't just metal, it's liquidity. While crypto competes for attention, sovereigns are building monetary.
And if you look at silver price measured in dollars, it has pretty much been stuck a little bit in this $50 area. So maybe do you have a certain spark?
Wait a minute. What do you mean stuck in? What do you mean stuck in this $50 area? We just got the $50 2 or 3 weeks ago. It pulled back to 46, and here we are at 54 again. So this is not, all you watched over the last 2 or 3 weeks is the overbought being undone. And here we are back to those highs, and we're nowhere near as overbought as we were then. This thing's going to go through 54, 55, and your next stop will probably be 60, 62 in very short order. I think over the next 6 months, I don't hardly ever go out on a limb like this, but I think $100 an ounce, I think within the next 6 months it's an easy call. But do understand that along the way, if there is a failure to deliver, the whole game stops, because then gold and silver become priceless. If you can't get it, what's it worth? And when man cannot get something, they want it even more.
Yeah, so what I was more saying, do you think it's going to be the retail investors that would break silver through that area? The demand from the retail investors?
No. I mean, retail's going to jump on board. Retail right now in North America, as I mentioned, is soft. You had big buying the last, 3, 4, 5 years, and then this year you had, when we got higher prices, you've had a lot of sellers, legacy sellers, and you can see that for sure within the coin market. Pretty much most silver products are bid at spot or slightly, Eagles are bid over spot, but junk silver, which was really the only form that Americans could buy back in the late 70s and early 80s, junk silver, the bid on that now is like $4 under spot. You can buy junk. It's the cheapest form to buy. It's the best form to own. But what's happened is a lot of the people who bought back at $40, $50 back in 1979, 1980, those have come to market. Those people, a lot of those have sold. And what the dealers are doing, or what the wholesalers are doing, is they're taking that silver in $3, $4 under spot, and they're sending it to refiners, and they're picking up an extra 6 to 8% commission or VIG or whatever you want to call it, because that junk is being melted down. Now, this is a temporary situation because there's only so much junk that can be sold, and I think that's slowing down already. But what this means is, going forward, there's way less junk available than there was just 6 months or a year ago, because so much of it has been melted down. In the future, in my opinion, junk silver will be the most expensive form of silver in the United States, including Silver Eagles, which right now is by far the most expensive form of silver. So what I'm telling you is, if you're buying silver, buy junk. It's the best form to own, and it's the cheapest form right now to purchase.
Bill, how are you looking at miners, so gold and silver mining stocks?
I mean, miners have been the star for the year, and I think they're going to be the star going forward. The only problem with that is if you buy miners and you have it in a brokerage account and your broker goes down, your stock's gone. Again, go back to the Great Taking. If you've not watched it or read about it, do so, because otherwise you're playing a game with two hands tied behind your back and hopping on one leg. The bottom line is when institutions go down, you're going to lose your capital. So if you want to buy miners, go ahead and buy them. I think you'll make a ton of money, but make sure you have the stock certificate, because that will act as the title to your car or the deed to your house. That is proof of your ownership, and it can't be taken away. But it will be taken away. Just so you understand how this works, Vlad, think about all these brokers that are advertising $7.95 for a trade, whether it's 100 shares or 1,000,000 shares, it doesn't matter, $7.95. What kind of business model is that? There's no way they could be profitable, fly around in corporate jets, have huge corporate buildings. The way they're making their money is when you buy a stock, before settlement day, that stock is probably lent out. So they're earning interest on your stock that they've lent out on money that they didn't have to put up. That is the profit model for Wall Street, is to lend out your securities. And when the music stops, you're not going to get your securities back. So that's why you want the certificate in hand.
Derivatives markets briefly froze recently, raising questions during a historically quiet Thanksgiving trading window. While exchanges blamed glitches, investors were reminded that paper assets, ETFs included, are promises, not possession. Bullion is different. No expiration, no counterparty, no digital denial. Shipwrecked treasure recovered centuries later still holds value because silver never stops being silver. In a landscape dominated by financial abstractions, physical metal remains the ultimate portfolio insurance. Not because it's perfect, but because it survives every monetary experiment, crisis, policy error, and bubble cycle that eventually shakes the system.
Gold and silver, they are money. And this is about money. This is not about, it's not about use. It's not about production. It's not about consumption. When this goes down, it is a credit event. It's the end of an empire. The United States is so indebted that they can never pay back what they owe in current dollars. And the dollar is going to crack, credit is going to crack, and when credit cracks, the real economy stops because everything runs on credit.
And Bill, how would the rest of the world look during these? So if this does occur, what would happen to all the other countries?
Well, right now, the United States dollar, call them the treasury bonds, the treasuries represent, 50 to 60% of foreign central bank holdings. So if the dollar cracks, what does that do to the central bank balance sheets? Now, if they have gold on it and the gold has gone up and the dollar's gone down, those countries will be better off than countries. I lived in Costa Rica for 5 years, and the Costa Rican central bank is exclusively U.S. treasuries. So what's going to happen in a country where all of a sudden their central bank goes belly up? It's going to be a disaster. So it depends on the country, and it depends on the balance sheet of that specific country.
Mm-hmm. And what would you say to those people who would say, well, the U.S. can keep kicking can down the road for many decades, and then they can sort of do this transition softly?
2 words: good luck. Or 4 words: good luck with that.
The structure is bullish. Breakout, retest, reclamation, and now new highs above $50. Silver could still dip. Volatility is native to metals, but the probability of falling through the floor shrinks each week as sovereign demand absorbs sell pressure. Doubling from here would land silver near $100. mirroring the 3x surge seen between late 1979 and January 1980. Markets don't move in straight lines, but major regime shifts move fast when they finally break. The crowd may not be ready, but the price floor is forming, the chart base is set, and the world's largest buyers are